episode of With Sonar. I am Luke Velasquez. It's Wednesday, 4 p.m., right after the 4th of July, so hopefully you all had a fantastic holiday weekend. We did for sure, and I am joined by a special guest today, Mike Vincent, a.k.a. The Dude. How are you doing today?
Peace and love, everybody. How is everybody? I'm doing great, man. How are you?
I'm fantastic.
Did you have a great 4th?
I did, actually, yeah. I'm
Awesome.
finally getting over the sunburn that I collected there a little bit.
Yeah,
I never
I
spent
got
any
you.
time in the sun.
So are you like I go out in the beginning of the spring and stuff. I just get sunburned and I just don't wear any sunblock the rest of the year. You do the same thing, or
Generally, yes, but this year I was indoors for, well, a lot, all of it.
as many people have been, right? For like a little, all of it.
Yeah, I was gonna go to the beach and then I didn't.
Yeah,
and then 2020 said nope.
Yeah, exactly.
But no, that's great. But thanks for joining me. I know Kyle
Absolutely
wasn't able to make it. So maybe we'll have an intelligent conversation for once. Oh,
Yeah,
sorry,
well, good luck.
yeah, no, not from us. But we're right after the holiday here, and I mean it's been a wild first half of the year for sure.
Yeah, no. You think?
Roller coaster central.
Yeah, we were hoping to have like a steady increase, some type of decent comeback after. I mean, 19 wasn't an awful year, but it was comparative to 2018,
Sure,
right?
yeah,
and you had all this excess capacity, so there was hope of. And if you recall, before all this stuff went down, back in the good old days when we just had to worry about World War III and trade wars and that type of stuff, right? And back in the good old days, we had the carefree days.
Yeah.
Yeah, people were brokers and truckers weren't doing so great in January.
Yeah.
Right? I mean,
it was getting soft.
It was pretty soft, and people were not doing that great, and they were and we're hoping for something to bring things up. So careful what you wish for, right? So then things got a little bit crazy. So it just you can't you've got to have the information and know what's going on. Something like this you're never going to see.
Yeah.
You're not going to see this coming down the pike.
Yeah. No, it was, so we launched our rate forecasting tool within Sonar.
Right.
What was it, like 8-9 months ago now? It's in November, and what's great about it is it's a forecast. What's bad about it is it's a forecast and not a fortune telling machine. So you're always, I mean, it constantly changes, and I was getting asked questions like, oh, your forecast, like, how did it forecast COVID? It's like. It didn't.
It didn't. You can't. And some people get, and you can get really deep into the different different signals on geopolitical events and so on, and marketing, and looking at all those different things, all the different social signals on social media and that type of stuff. And people get into that type of stuff, and they can do, and it can set up and show you where there might be this particular problem or might be this, so you can have that plan B, C, and D. But it doesn't, like you said, it can't. It's not a crystal ball. I wish I had that crystal ball.
Yeah, exactly.
It's off of today's market rates and where those trends are going, and then introduce a virus and see ya.
But that's the beauty of it is there's no time like the present. You can see the information today, what's happening right now, and then we can adjust accordingly.
Yeah, absolutely.
So last week, Kyle and I, we were talking a lot about the run-up to 4th of July, because I think a lot of folks, I was surprised. I didn't quite see. I mean, I figured there'd be a little bump in volume going into the 4th, but not what we saw. I mean, we saw this. Well, first off, we had the bottom there in mid-April off of that toilet paper panic buying surge in March.
Yeah.
And then we started rising slowly, and then we just ramped the last like 2 weeks of July. Let's actually throw that up on the screen here if we can.
Yeah, that's a good idea.
So folks, ignore the yellow and orange line here for a second. Just look at the blue line. I mean, so right down here, what's that, April 15th, 16th? Yeah, we bottomed out there at approximately 8,500 there on the index. If you can see there all the way on the right, that number. And we were just kind of slowly rising, got back to normal levels. That green and orange line are 2018 and 2019 levels for comparison. And then just this ramp right here that started right around the 14th, just...
Yeah, it went crazy, because I mean, I remember talking about it, and it might have been even on this show, because I've been on here once or twice before. But back here, like you're right in this crosshair right here on the 13th. Right, on May 13th, we were talking about how it's passing 2019. Right. But 2019 was a dumpster fire leading up into Memorial Day. right? And so, okay, not that big of a deal.
A little bit of an outlier.
Right, yeah, kind of an outlier. But then it continued its rise. And then this happened right here.
Yep.
Which was, you usually see this bump. You saw it a little bit earlier in night and then drop again here. But you had all that
looking for.
Trade wars and all other kind of stuff. You're looking at this. So it was following this kind of seasonal pattern.
Yeah.
And then it just shot up right here, which, industry preponomics, getting ready for opening.
Yep.
Refilling warehousing. Autos started moving.
Yep.
Mexican border crossing started moving heavy at that time. They were suppressed quite greatly prior to that, but they started taking up. You watch the OTV out of Laredo, Eagle Pass, and so on, El Paso, and it was starting to shoot up through the roof.
Tender rejections were going up there quite substantially.
Absolutely, but the tender rejections. It's interesting because during this big rise, right, in those areas they were going up substantially. Yeah, and they did in other ones, but it took them a while to catch fire, right? On this one, instead of
2-3 weeks lagging behind. Almost.
They really were, and it's kind of I don't know what your thoughts on it. I'm talking to Zach, I'm kind of laying on the idea that things have. They were more normal type of routes than they were when it was just pandemic buying and things were just crazy going all over the place. So
it was maybe a combination of people are like, okay, I settled down a little bit. I'm going to go back to my normal buying.
Carriers figured it out.
I might buy a car again, or a little bit of stimulus money that came in, and then this the most recent surge. Zach and I were talking a little bit earlier today, and it was like, well, what caused that extra little bump there? Was it a panic buying? Surely not. And the theory, and maybe you have a different one. It's hard to know for sure, but the theory
it's hard to know what my theories might be.
Yeah, right, really. Now, the theory is okay. Well, people started buying again all of a sudden, right? We had that big consumer report that came out in May, and it was like, whoa, consumer spending is like really high.
Consumer spending was up, and income was down. American way.
Potential recipe for disaster. But anyways, not what this show's about.
Yeah.
But then also it's you almost have like the type of buying that's different. Like before stores are ready to sell. Oh, okay, great. Everybody's at working here. We're going to sell a bunch of button-down shirts. It's like, oh, everybody's working from home now. Maybe we need to sell some more athleisure wear. So we need to start swapping out.
Yeah,
goods.
athleisure wear went up. Right.
So we need to maybe take some of that formal or business wear take them back to the warehouses, and then take the athleisure wear and send that back to the stores. And you kind of almost had like more returns coming and.
Yeah, well, it was quite evident with many of the markets that we were seeing the rise and fall in those rising markets. When talking on the different shows and watching them, when you're looking at outbound tender volumes out of like the Inland Empire spiking, but the major lanes are like to Stockton. Okay, that's not the economy on fire. That's warehouse repositioning.
Right.
And we saw a lot of that. And to your point as well, the type of goods that we're moving. Jason Miller at Michigan State, professor at Michigan State, spot on, consumer driven.
Yeah.
The volumes, the backbone was not industry that was moving this. Although industrials did pick up a little bit, but
sure, but ultimately driven by the consumer.
Absolutely,
and all goes back to the consumer here.
Yeah, no doubt about it.
Here's what's interesting to me, and this is where I know last week we were talking about, okay, well, where do volumes go from here? Because when we were talking last week, we were almost right on this peak right here.
Yeah.
And we expected this drop right here. That's very seasonal, right? I mean, you can see that plain as day right there. You have the green and orange line, which is 4th of July, 2018 and 2019.
Yeah, and it always takes it takes a five days for it to bump back up.
And then it comes back up.
Absolutely.
But normally it has its dip, and then it kind of hangs out here for a little bit. Let's drag this over. My plus and minus sign are blocking it. We kind of hang out here for a little bit, and then we come back up as everything comes back online from the holiday. But what's getting me nervous is we're kind of having the middle of that dip. We're starting to dip further.
It is, and
not freaking out, just kind of like.
No, okay. Well, I mean, it is telling. You can see a trend within this trough.
Right.
Because it's not the same. It's not the same trough. And the other thing to look at here is that we're offset by a couple days.
Yep, that's true.
4th last year was on a Thursday,
and we hit it right on a Saturday.
And this year we hit it on a Saturday, and last year it was on a Thursday. So it's off a little bit. So where we're at now is about 2 days behind.
That's true. That's a good point. So yeah, see, you could be having a couple folks that maybe took Monday off, or they're, yeah, that's true. That's a fair point. Either
well,
way,
I mean, you saw this dip right here. This was the Friday dip. This little right at the top here. There's your Friday dip.
That's true.
Was right there, which you didn't see here. It was a straight cliff. So you can see that kind of change right there. What I'm saying is that we are already into, what is today?
Wednesday.
Wednesday.
Oh.
It's Wednesday. It's July still, right?
Yeah.
Unfortunately, 2020. But so we're already into Wednesday. We're already into midweek, right? And this is where traditionally, as Zach will tell you as well, our director of freight market intelligence, this year seems to be backloaded during the week for volumes, right? So it's like Wednesday, Thursday, Friday where everything picks up. The week kind of grows each week. So we should be seeing this start to level or go up, because we're already ahead of last year as far as the days, right?
Yeah.
We're Sunday, Monday, Tuesday, Wednesday. We're 4 days out.
Right.
Right? Now, this would be Monday last year. Okay?
So normally there'd be like another 3 days of this lull cycle, but in reality, because of that Friday, we may only have another 2 days left before
we should see that spike quicker than here.
Maybe a day earlier or so.
That's right.
Either way, even with this little bit of a dip here, right? Even if we don't get back to this monster level up here, I mean, any sort of bounce back would still keep us well above 2018, 2019 levels. I mean, by 4 or 5%.
Yeah, I don't. Looking at all the other indicators that are out there and what's going on, I don't see it. I don't see it dropping down into the into the 8s
Not
or
like
even low 9s any more than I see it going back up to 12.8, 12.9, 13. I don't see either one of those scenarios happening.
Yeah, I'd kind of like to see it just hang out, if possible, a little bit above 2018, 2019. That's nice. That's healthy. Shows a little bit of growth. That would be good. And that
would be good. There's going to be some bumps and grinds there. Lawrence Alvarado out of the Catholic University in D.C. of America in D.C. Likened it to a series of W's that keep getting smaller and smaller as we go. And I think we're hitting our first big W.
What'll be interesting, I think, is what will happen to tender rejections. So I've been looking at that, and those are they're remaining level. They've softened a little bit. In some areas of the country, they've softened a lot more. But
true.
Overall, they seem to have they're not falling off a cliff. They're holding on. They're still at over 15% right now, which is quite elevated. I mean, we didn't see that
comparatively,
level.
Yeah, absolutely.
We saw that level once in all of 2019, and that was right around Christmas, New Year's.
Yeah. When you say 15, it strikes me as that's not too bad, I guess.
We were looking at
because you're thinking of the 25s and 26s in 18. But yeah, 15's fairly elevated when you think about when you've got you got an O-try or an outbound tender rejection rate in the really 8 to 10ish area. That's where you're starting to see the upward pressure on rates. So if you're at 15, close to 16, those pressures are still there, right?
Absolutely, no, 100%. I mean,
So I think a lot of that depends, Luke, on a lot of different things, and obviously it does. So you got to look at the different economic indicators that are out there, right? So you just saw that United's looking at laying off 36,000 people because now you've got airline bookings that are dropping again because of the outbreaks. So 36,000 people are getting laid off, and you see states that are pulling back a little bit. Some are opening. You see the way the virus is moving through the different areas, whether it be lack of social distancing or just the fact that it's working its way through the society and it's hitting places it just never hit before, right? Whatever you want to. I'm not a doctor. I'm not here to debate that. What I'm saying is that you have those economic issues that are going on. You got PPP that's being extended, which is good. You got people going back to work or not wanting to go back to work, people who are going to go back to work who are now scared because they're watching the spike in cases that may not go back to work. All these different things playing into it in the PPP. Is it propping up zombie carriers right now, or isn't it? And when it runs out, do those guys go away and capacity tightens? I don't know.
Yeah. No, that's a good point. I mean, something else I was looking at the other day is Class 8 truck orders. So new orders have been suppressed now for a year and a half, almost 2 years, pretty much since the start of 2019 or late 2018.
Yeah.
And generally, when we've been looking at rates have been spiking a lot over the last say 6 weeks or so,
right.
And generally we'll start to see a bump in orders when rates start to go up, but we're not seeing that right now. They're still staying suppressed because I think, like you said, a lot of people are scared. They want to spend money.
Yeah,
I don't know if I want to spend money.
I think if it were a different. A different cause of the environment that we're in right now, or the market that we're in right now, freight market that we're in right now, you might see those orders starting to go up. I think there's a lot of hesitancy there because it's very opaque what's going to happen over the next couple few months, right? Just about anything can happen. 2020 has definitely thrown some twists and turns, right? So there's not that confidence level that there's no economic indicators out there that are going to show you that we should be at 13,000. In OTVI.
Yeah.
There's not. Yeah, it is getting better. It's coming off the floor, but it's coming off of historic lows. Yep. They're just lesser degrees of a dumpster fire. When we celebrate 1.48 million new jobless claims as if it's a good number, a good number's like 150,000. Not 1.48 million.
We're 10x that.
yeah.
And we're calling it a good.
And we're calling it a good number. So
Yeah, no, that's a good point. The chart here that I was just referencing, if you want to throw it up, this was these are the sources. So the blue line is over the last 5 years. You can see Class 8 truck orders here on the right. So as of the end of May, so beginning of June, there were 6,500 orders for Class 8 trucks. So very, very low. Actually, we can see that's a 5-year low almost apart from April. So April and May were both 5-year lows. The green line is the average spot rate over the same period of time. So usually that rise in spot rates, you'll start to see a rise in Class 8 orders, but you're
starting to see the beginning of it. I mean, one data point doesn't necessarily mean a trend, but you have a tick.
You have a tick, but I mean, even still, all of 2019 was suppressed, and a very little bit here at the very end of 2019. There was a slight bump, but nothing exceptional. Obviously, there was exceptional buying in 2017 and 2018.
Yeah,
that flooded the market with a lot of capacity. But I mean, this right here. I mean, there's still a lot of fear. Still a lot of fear in the market.
Yeah, there is, but I mean, there's you've got to turn over equipment.
Yeah. What do you say? About 3 years is 3 to 5 years.
Yeah. So I mean, there's natural turnover that's got to happen and is going to happen as you know, but the used truck market is depressed.
Yeah.
Getting a little better.
A little bit,
but. Yeah, I don't. This is an indicator that there is. It's up. We'll have to watch that for the next month or so to see what's going on there.
See what happens over the next quarter.
Where the confidence level is.
Yeah, absolutely. What I think's interesting too is we've been looking at different we've been looking at a lot of trucking indicators, but I think it's easy to forget about customs imports, maritime imports.
Yeah, that's true.
Those really do feed a lot of that OTVI, especially in a lot of those port cities. I mean,
no doubt.
When we're looking at the volume that's coming in over the ocean in LA and Long Beach, that feeds LA and Ontario markets, and that ultimately translates a lot of long haul trucking freight.
It does. You can track it. You can watch it move across the country. You can actually watch the imports occur. You can watch the Freightos Baltic Index and look at the 40-foot equivalent pricing and watch that trend and actually follow that hitting the coasts and then hitting rail. You can see it hitting long haul, and then you can start to see it hitting locations like Joliet and Dallas and Memphis, et cetera. So you can actually watch that stuff kind of move out. But not only is it the volume, Luke, it's what's coming across that's really important at this particular moment in time, right? When you're looking at just like a normal year, when's a normal year? I can't think of a normal year in my entire life.
2020 feels like it's been 4 years long now.
Yeah, the normal year was like last week. No, that was an abnormal year last week. you're looking at those volumes and predicting what's going on, but you also need to be looking at those volumes because they're very telling as to what is going on in the economy. So what type of goods are actually being imported?
Yeah.
Right? And the only one that looks any good is retail.
Yeah. No,
and e-commerce.
That's true. I mean, and I think that's kind of where, when we look at spending being so much higher than income, it makes you wonder, okay, great, in the near future, volumes may be okay, but what happens in 3 months, 6 months, when that potential stimulus money dries up, or we stop throwing money on the credit card, or it's ramen noodles time?
Yeah, what's the holiday surge going to look like?
Yeah,
is it going to be one?
Yeah, that's the question, right? We already had it.
We had the 4th of July holiday surge.
Definitely had the 4th of July, like we've never seen before.
Yeah. So you bring up a really, really solid point. Is what is going to happen out, and we're talking terms of 2 months, 3 months, 6 months. We're looking at end of Q3, Q4. What is going to go on moving forward, right? When you're buying trucks and stuff like that, you're really looking at the overall movement of the market, not tomorrow. What's happening, right? Unless your truck just blew up and you got to buy one. But what we're measuring here is these volumes. Is what is that sentiment? What do things look like? And you saw that small tick, despite volumes going through the roof and prices started to go up. Right? It was a small tick, which is okay. We've got the money. We're good. When you start looking out that far, it becomes very, very difficult to see how far that is, right? And there's things within Sonar that you can use to look at those, the economic indicators. We were talking about the imports and what type of imports there are, the unemployment rates, et cetera, productions, the ISM indexes, and all that kind of stuff. But you really need to be watching this stuff to see what's happening on a tactical daily basis right now to try and squeeze every last juice that you can out of the freight that's moving or out of your carriers if you're a shipper, right? I mean, that's what this is looking at. Now, tomorrow on Freight Forecasting, I'll have Kyle Lintner and Daniel Stanton on. We're going to talk about futures a little bit. And that's something that you can use that is a great tool to hedge and be able to smooth out those curves. So as you're forecasting and looking through, you can kind of protect your cost on that cost per mile line, whether you're shipper or whether you're carrier, right?
Oh, yeah, absolutely. No, that'll be a good one to watch. You mentioned a lot about looking at the near term, and I think you're right. Yeah. It does kind of look. It's very difficult to understand what's going to happen in 3, 6, 8 months. But if we look at the map, this is one of my favorite things to look at. And so this is one of the first things I look at every single day when I log in. This is the weekly tender rejection change. So it shows that the markets in blue are showing the greatest increase in tender rejections over the last 7 days. This is a rolling 7 days. This is as of this morning. Mm-hmm. The markets in red are showing the greatest decrease in tender rejections, and then the markets in white are, relatively flat. Maybe a slight uptick, slight downtick, nothing crazy.
Yeah.
So even with that epic rise in volumes led also to a pretty substantial rise in tender rejections. And right here today on the, 4 days after the 4th of July, we can already see there's a ton of softening in different areas. But some areas are still tightening up. Yeah. Right? I mean, this is something that I want to know. Markets in blue, like if I'm a broker, markets in blue, those are areas for me to attack and call and see if I can lend capacity to shippers. If I'm a carrier, potentially want to send a truck there, I'm going to have a lot of options.
Yeah,
if I'm a shipper, I want to know, hey, well, okay, shoot. Like if I'm over here in, Evansville, looks like it's tight all around me for the most part. That's going to eat up a lot of capacity. Might have a hard time shipping today.
Yeah. It's interesting to look at this. It's very telling of exactly what happened. It's a holiday week.
Yeah.
Right? So, last week, the volumes were through the roof. They're down here. So you'd expect some of these flats here and even some of these reds here. Although, when you're looking at this El Paso market here, I can tell you, when you're looking at the Mexican border crossing, they fell.
Yeah.
If they continue to fall through the post the holiday, we'll see. But they've fallen a little bit. So we'll see what goes on there. And that's your 10% reduction in O-Tri right there week over week, right? Yeah. And you would notice that in other places, but you're right, these other heating up markets. So, okay, these places are flat, which doesn't mean they're great. If you're looking over here, 0.38%, O-Tri over in Southern California was pretty high, rejections last week, weren't they?
That's for LA to be able to maintain where it's at is pretty substantial.
Yeah, so if you're looking at that, can you not chart that off of there?
I think you can here. Let's see. Let's take a look. Boom.
There you go. Yeah.
Make it 2 clicks. So now keep in mind, folks.
So that's weekly change. That's not the actual
change, not the
right.
actual. So basically, from last week to this week, we're still up. Even though it looks like it's coming down, we're still up. Because it's a positive number versus, okay, like the growth has slowed down.
Yeah.
But we're still going up.
Yeah, so that map is really good at showing you the week-over-week change and where that trend is going. But you got to look at the other data underneath there as well to see, just because it's white doesn't mean it's a bad market.
Right. Exactly. Right. Yeah, I think the way I would read that, like if I were looking at this map here, the way I would read this is, okay, great. LA, relatively flat from where it was last week. Well, last week, if I'm a carrier, it was probably pretty good. So, yeah, I'm going to keep on going.
Yeah, if you've got a good plan going in that market, keep it.
Keep
the game plan, right?
Keep doing what you're doing.
Right. It's these are the ones where you need to have alerts set in your sonar to wake you up in the morning and say, hey.
Hey, what you doing?
There's no trucks in Louisiana.
Can't imagine why. But yeah, no, I like this, and then of course you've got your once in a blue moon. Maine is just popping off. It seems every now and then that gets a little tight.
Every now and then. Blueberry season.
Yeah.
Right.
Not a place you want to have a truck, but if you happen to have one up there now, you might actually have some luck.
Well, that's where you can. I mean, you can look at these and you see those things. But if you put this next to, like, say, a weighted tender rejection map, then it would give you that indication that okay, yeah, New Hampshire's exploding, up 6.28% from what
2%.
Now 4 of the 7 trucks coming out of there were rejected.
That's my favorite. Like I'll be looking at the map and like Bismarck, North Dakota will say tender rejections 40%, and I'm like, so 2 of 5 trucks reject it. It's like, okay. So if you happen to have a truck up there, congratulations, you got a decent rate.
Yeah.
But no, this is good. What's I know we're starting to get here towards the end of time, but I think it'll be really interesting when we come back next week. We'll be able to look at the volume levels and see exactly what happened. I mean, that pattern. I mean, we should know in a day or two what's going to happen after that season.
We'll have a much better idea, that's for sure.
But surely by next week, we should have a few days afterwards too to see if it falls maybe back into a seasonal norm or if it's going to pull another 2020 2.0 back half of the year and go somewhere else on us.
Yeah, who knows? Yeah, you're exactly right. I think next week will be a little bit more telling to see where that trend keeps heading.
Yeah.
But I'm with you. I think you said earlier it comes down somewhere in the 218, 219 area, I think is where it could settle.
Yeah.
If things progress and we keep opening as we are right now instead of falling off a cliff and coming back up.
I'm gonna really keep a close eye on tender rejections though, because I think, and this is a theory, and I've been wrong many times, I'll be wrong many times again, but if volume levels do dip a little bit, while tender rejections will probably follow, I don't see them following to the same extreme, or at least not right away, that maybe they did right after that panic buying drop in March.
I'm with you. I'm with you 100%. Yeah. I mean, if it comes down and it settles in a thing, I think O-Tri stays up. I don't think it crashes, and because carriers are going to, there are, people say there's not, but there's zombie carriers out there right now. They're being held up by the PPP, and they're going to go away.
Yeah.
They just are.
No, it's definitely just a matter of time for sure. Well, sweet. Appreciate you coming on with me here today.
Absolutely,
man.
It's been
a lot of
fun. Love it.
Also, we had you gave me a nice little screen share. We can see the same screen here. That's cool. So thank you for that. I like that.
You got it, man.
Otherwise, folks, thank you for watching at home. We'll see you again next Wednesday at 4 p.m. Tune in. Also, be sure to watch The Dude and Dooner. They are on with What the Truck, as well as Freight Forecasting. That's just you and Strickland, though, right?
That's just me.
That's you. Okay. You don't need anybody else, I guess. No, that's great. Thank you for tuning in. Also, FreightWaves now every single day, Monday through Friday. Be sure to tune in on those. That goes live at 10:15 a.m. And that's a really good way to kind of get a quick update first thing in the morning, what's happening day over day and where the hot changes are throughout the market. So be sure to tune in to that every morning, 10:15. broker, shipper, carrier updates right there for you. Have a fantastic rest of your week.